Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como with Ireland Como Lafoy. Let's get into what happened in markets today. All right, we had canola down $4.90 at 695.90. Minneapolis wheat down 3 cents to finish at 603. We'll talk about why that's important in a moment. Kansas wheat down half a cent at 526. Yes, half a cent. Chicago wheat down a quarter of a cent at 538 and a half. Soybeans down 9.5 cents at 1011 and a half. We'll talk a little bit about why that may reverse tomorrow. Soybean oil down zero point zero 0.01 points, up that much, almost at 56 cents a pound now. Corn was down today 5 3/4 at 393.75. Canadian dollar down 14 points at 72.84. Some big things on the US dollar we're going to talk about today as well. Live cattle, feeder cattle, again, high, making new highs, very high prices for beef as well. 224 and 3/4 for live cattle and 333 and a half or so for feeder cattle. All right, let's get into some of the news today. We're going to start off with some macros and then we're going to get into the grains. So US dollar index climbed about 1% today, making some very substantial gains over the last few days. The US dollar index rose to 98.6 today. Its highest level in nearly a week, which is supported by easing trade tensions following the newly announced EU and US trade agreement. This deal between the US and EU imposes a 15% tariff on EU exports to the US, which is down quite considerably from the 30% rate initially threatened by President Donald Trump. Additionally, the US and Chinese officials are set to discuss ongoing trade issues with an extension of the current trade truce set to expire on August the 12th, which is widely expected. The extension is widely expected. The number that I saw today was a 3-month or a 90-day extension. So, what the market is focusing on as well is also turning towards the Federal Reserve's monetary policy decision, which is later this week on Wednesday at I think it's about one. I think it's 1 o'clock or something like that. 1:30. I can't remember. I always have to look at my calendar every time. But so there's no changes expected to the federal funds rate. Although there will be a key set of economic indicators which will also be released in the coming days, but some after the interest rate announcement is provided, which will give further insight into the U.S. economy. There's GDP coming out this week. There's non-farm payrolls coming out this week. There's some inflation data coming out this week. So, lots of stuff to talk about. Currently 96.9% of the market feels that the Fed is going to stay on rates and keep them between 4.25 and 4.5. It's also possible that the market is building in some probability of a hawkish statement from the Fed, as these probability ratings have actually gone up over the last little while. I think a lot of this might not be very welcome news to the US president, although, anytime economic indicators are good, that's generally welcomed by the administration. But we do know that President Trump wants the interest rates lowered. And so far, the data that has been coming out does not suggest that that is in the cards in the short term. All right, let's get into some of the ag markets now. Corn was one of the largest losers as a percentage today, down 1.2%. Yes, the Corn Belt is seeing a hot end to July, but the amount of rain seen this month has been beneficial, is likely outweighing some of the heat. The heat may now be helping the crop develop. We'll get into crop conditions in a second, because we did see a reduction in the corn crop condition this week, or just announced just before I started recording this. December Minneapolis wheat. Here's the one that really gives us some concern here. Minneapolis wheat, particularly only December, where we see the largest amount of open interest and trade at this point in time, was holding some support over the last week or so. It had come off in the last week or so, had held some support right at 605 or right near 605. Now this is making new contract lows, where we closed down to 603 today, a few cents below that support level. This is a bit of a concern, particularly as we've been watching that level, since May, essentially, that, the market was trading significantly higher and then came back off, and it just grinded lower until we finally broke support. So there is some issues here in Minneapolis wheat, and I know that isn't welcome news to a lot of prairie farmers here in Canada, because wheat was already in a place where it wasn't very profitable and it's difficult to make sales in. So some more patience may be required here, or some additional risk management strategies may be required here as well. November soybeans also took a bit of a hit today, but we're also going to talk about why that may shift tomorrow because of the crop condition ratings coming up. It did also kind of tickle below this kind of previous low from May, 3rd or something like that. We've obviously seen it trade lower than that recently, down even below the $10 level. That may be this may be a suggestion that we're going to get back to this $10 level before it gets better if it doesn't recover shortly. It is making lower highs and lower lows in this market, so that is a little bit concerning from a bearish standpoint. But other than that, soybeans have kind of been more range bound than anything, as a lot of the factors are already kind of getting priced in, like big yields, big crop production potential in South America, and even the biofuel stuff is starting to get priced into the marketplace. So that's where we stand for soybeans. Here's November canola. Now, we did see canola down today, but as you can see, we've been seeing canola kind of rise throughout the last week or so. This is likely in conjunction with the soy oil complex. As you can see, the soy oil complex continues to rise here. Not making new lows yet, but it's still trading very close to the previous highs that we saw at the end of the week previous to last. And it's kind of holding those, trading in a sideways pattern. We've seen that happen a couple of times here where it moves up to new highs and then kind of trades back down into a pattern. And so far, that's continued to make new highs, particularly off the biofuel demand story. Particularly in the U.S. So I think as long as December soybean oil continues to remain elevated, I think it will be hard to sink canola strictly on the basis of its correlation to soybeans proper. So I do think that there is a larger correlation to canola to soybean oil at this time, and we're also kind of in wait and see mode on yield here in Canada. But a lot of the reports that I'm getting now over the prairie suggest that things are in pretty good shape in many areas. Okay, going back kind of to macros a little bit, oil rose today 2% to $66.70. I think that's on the front month crude oil. Again, this is driven by renewed geopolitical concerns after U.S. President Donald Trump advanced a deadline for Russia to agree to a ceasefire or a truce with Ukraine. Trump warned that Russia has 10 to 12 days to comply or face 100% secondary tariffs, again, raising the fear of crude supply. This also follows new EU sanctions, including a lower price cap on Russian oil and bans on refined products from third countries. So, products that come into Russia get refined there and are sold as refined products. So this kind of puts the question of Russian economics into play, and it also kind of potentially limits the supply of crude oil coming out of Russia, and that's at a time when OPEC doesn't have a whole lot of spare capacity. So we're seeing crude oil run up here as well. It had a good day today. Still not making new highs or anything, but it is back to 66.90 here in the September. So we could see some continued follow through on that. I think that's good for soybean oil. I think that's good for some of the biofuel components to the market in grains, but still something we should pay attention to, as it does create inflationary pressures as well. All right, let's get into crop conditions. These are just literally hot off the press, just 5 or 10 minutes ago before recording this. Here's corn crop conditions. We actually saw these drop 1 percentage point today to 73% good to excellent. So, we're still well above average, particularly for this time of year. We do tend to see crop condition ratings fade as we kind of get into late July, early August, and then as we get into, early harvest and things like that. But, so it's hard to say, it is a 1% drop. I think this was likely expected by the marketplace, but it is still very high compared to averages. So, probably not a lot of strength to come into markets, particularly from this corn crop condition ratings. That's maybe a little bit different for beans. We saw 2 percentage points of gains in beans, and now we're well ahead of average at 70% good to excellent. We're still within the range of the last 5 years, as you can see here, but still very beneficial, which probably so some of that may have been building into soybeans over the last little while as the prices were fading. Another interesting one here is US spring wheat, and that dropped by 2 percentage points today. I'm going to bring up just kind of a snapshot of the spreadsheet that I use to kind of track these things. Here is this week's good to excellent ratings: 5 excellent, 44 good. That is, so as you can see, that's a 3-point drop week over week, from 77% good to excellent to 74% good to excellent. But I think what was interesting here, and it's not necessarily reported a lot by the media focuses a lot on just those good to excellent ratings. Sorry, that 77 and 74 was the 5-year max. It went from 52 to 49, 3-point drop. So 52% good to excellent last week, 49% this week. It actually was as high as 54 just a few weeks ago. So the conditions are coming down. But again, I wanted to focus a little bit on the other side of the good to excellent, which is the poor and very poor. And as you can see here, last week we had 13 points in the poor and 3 points in the very poor, for a total of 16 points. Today, that has grown to 14 points in the poor and 4 points in the very poor. So that's 18 points here of poor to very poor. So we're seeing not only the good to excellent drop, it's not necessarily moving just into the fair category. We're actually seeing some of the fair stuff move down a level into the poor and very poor as well. So, we saw U.S. spring wheat today sink to new lows, as we talked about earlier, which is a concern. But I would be concerned a little bit about the the direction of these U.S. spring wheat crop conditions, particularly as we get into a lot of head filling and things like that. So just something to keep an eye on. We may see some support in spring wheat tomorrow as a result, which I think would be a good sign. I would love it to move back above that support that it broke today mildly. All right, just to kind of talk about some weather here. Here is some prairie rainfall over the last little while. As you can see, we did get some good beneficial rains here in the southwestern part of Saskatchewan, which is a very dry area. There is some dry areas up here in the central Saskatchewan area as well. So I can't tell by this map if this is where the bulk of the problems were, but we have gotten some good rains in a lot of those areas. Also, as you can see here, southern Manitoba, like the very southern parts of Manitoba and even eastern Saskatchewan, got really good rains. This bullseye here where it says 40 millimeters, I think that was right where we were. And we were even walking across the Costco parking lot today while we were getting absolutely, or not today, but yesterday, as we were trying to get a cart full of groceries to our car without jackets or without an umbrella. So that was a fun little Costco trip. Here's the forecast for the next 5 days. Almost some of the same. We got some precipitation in the in the half an inch to an inch range coming into the very southern parts of Alberta, some more in the southwestern part of Saskatchewan, but it kind of fades into the Dakotas and through Montana. So, Manitoba will miss a lot of it. Central Alberta, Saskatchewan will miss a lot of it or only get scattered showers. So not a large amount of accumulated precipitation in much of the prairies, but some areas will get it. If you're not already, make sure that you are subscribed to our YouTube channel. Just go to YouTube/at Canadian Ag Markets, Canadian Ag Markets, or at Canadian Ag Markets, the @ symbol. Hit the subscribe button here on our channel, and make sure that you're getting all of our videos in your feed if you like what we're doing here with the Canadian grain markets. Also, you can go to our website at canadianagmarkets.com, hit the subscribe button here, and it'll take you to our Insights subscription page. Only $99 a month for our Insights, which come out. We get weekly reports, we have ad hoc reports, we have morning commentaries, and of course, these videos get delivered to your inbox as well. So you hit subscribe here, and fill in your information there. You can cancel anytime, and it's only $99 a month, which is less than $1,200 a year. All right, that's all we have for you today. Thank you for joining us. We will see you again tomorrow.